We want to circle back now to the war in Iran. It is sending oil prices soaring, and that is stoking some new fears about inflation impacting people here in the U.S. So joining us now to talk more in depth about these developments is Tom Seng. He's with the Ralph Lowe Energy Institute at Texas Christian University. Tom, welcome to our show. Thanks for being with us.
Thanks, Will. Thanks for having me.
I want to begin with where oil prices ended up today. Talk about what happened there, and maybe what's your reaction to seeing that?
Yeah, this quite frankly, I've never seen anything like this. It was absolutely insane today. Prices got as low as 81, Will, and as high as $119 overnight, and that's just for the April futures WTI contracts on the New York Mercantile Exchange. We're down to around 83 at the moment. And again, if you and I had this conversation a few hours back, we wouldn't be talking about how much prices have in fact fallen today from Friday's prices. But there have been several announcements come out this afternoon. The G7 met. Those member countries are basically saying they'll tap their reserves if they have to. President Trump has said we'll tap the SPR if we have to. The Reuters has confirmed that at least one Greek oil tanker has moved through the Strait of Hormuz. We need to see more of that loosening up for us to actually put any faith in the fact that oil prices will stay, where they are, let alone go down further.
Now, you talked a few moments ago just about how you've never seen anything like this. I'm curious if you could speak a little bit more about that, about why that might be.
Sure. I think, what we see a lot of times, right, it's a fear factor. Prior to the attack on Iran, that Friday, which was the day before, prices were really about up to around $67. And that price, according to traders, already had what we call a risk premium. In other words, the anticipation that the U.S. Would attack Iran. But I think at the time the market was strictly looking at Iran, meaning, okay, there may be an interruption of their 3 million barrels a day. Okay, there's a possibility that they might try to block the Strait of Hormuz. But I think when that attack occurred, I don't think anyone truly anticipated that Iran would attack the neighboring petro states, Saudi Arabia, UAE, Bahrain, those countries. And then, yes, they went into a position to basically threaten any ships that moved through the Strait of Hormuz. So that situation was not foreseen. That led to prices, running up this past week. And then, over the weekend, the markets are closed. And so the position basically Sunday night when the market opened up, it skyrocketed and kind of continued that trajectory overnight. And again, it wasn't until these recent announcements this afternoon that prices have fallen back. We were at around $90 on Friday. And so now we're trading back down in about an $83 range today.
Now, something that people might see impact them right here at home is the price of gas whenever they go to fill up their car. So we mentioned in a story a few moments ago that Gas Buddy had said the average price per gallon had gone up more than 50 cents since the war began. Can you also maybe give us some insight about why that might be happening as well?
Sure. Again, it's a fear factor that, for instance, perhaps crude oil supplies would get tight. And that does lead to these higher prices for the feedstock that our refineries use. I will say, unfortunately, some of the retailers tend to go ahead and raise gasoline prices ahead of time, meaning, they have the gas in those tanks that are underground at the respective convenience stores, but then they go ahead and they jump the price up. So we're seeing a little premature pain. In other words, the prices that we're talking about, crude wise and gasoline in the futures market, they're for April. They're not happening right now. Now, I would expect that in the daily market, some of this price has gone up. But the one thing that quite frankly, just as someone who observes these things, gasoline could have been a whole lot higher if we'd stayed at $100 or above. So, to some extent, these announcements today, and they're designed to do that, they've kind of taken some of the fear factor of supply interruption out of the marketplace. So that, traders and buyers in general feel a little bit better about that. So we're at 83. I anticipate gasoline prices to climb up a little bit more. But my gosh, if we'd stayed around 100 barrels, there's no telling what the upper limit could have been.
Well, Tom, before we let you go, I want to just wrap things up by asking you about what you're going to be watching to move forward and the impacts of that. So if you could maybe just share some thoughts about where you'll be looking moving ahead in the future.
Sure. I guess right now, two key things. I want confirmation from the right sources that multiple ships are now, basically getting safe passage through the Strait of Hormuz, because you're backlogging crude oil, you're backlogging liquefied natural gas, and again, about 20% of the world's crude oil passes through those straits. So number one, let's find out that that's a safe environment now for oil shipments to continue to move through there. Number two, as President Trump is indicating, he's saying that essentially the war in Iraq is complete or near complete. Okay, well, it would be nice to get a true assessment of what's going on the ground in Iraq. Now, all of that being said, Will, there now has to be an assessment. Let's just say things calm down. There's a ceasefire. The strait is open. There's going to have to be an assessment of what actual damage occurred during this conflict. What do the oil fields in the Middle East look like? What about infrastructure for refining? What about the exportation infrastructure in all those neighboring countries to Iran? So a lot of dust needs to be settled before we can get a clear picture of what oil prices and therefore gasoline prices are going to look like in the coming months.
Certainly some paths to keep following, and of course we would love to have you back here on our show to provide some further insight. But for now, Tom Seng with TCU, thanks again for joining us here today.
My pleasure, Will. Thank you.